Time now for the markets with Leighton Spann, and the top story is the USDA's production and supply demand numbers.
That's right. As you noted a bit earlier, those new projections came out Wednesday. We do have analysis in a moment. Also ahead, South America planting progress impacts soybean prices. The weak economy does not seem to be deterring organic food sales. And a large U.S. discount outlet wants to buy choice grade beef for its stores. Lower U.S. corn yields were one headline out of the November 9th production and supply demand reports from USDA. In an interview Wednesday afternoon with me over the internet, broker Nolan Cullen with Walsh Trading of Jackson discussed the report's likely impact on the corn, soybean, and cotton markets. Nolan, did we see a lot of changes in the corn sector from those October reports a month ago?
No, Leighton. Today, USDA pretty well came in with what the trade was expecting, particularly in the corn. We did see the corn production lowered by approximately 1.5 bushels. That was a bullish indication for corn. However, the USDA offset that corn reduction by changing feed seed residual, lowering it 100 million. So on balance, the trade versus expectations of a carryover potentially around 800 million, USDA only lowered that carryover to 843. That was somewhat of a disappointment. On the day, the market traded both sides. We're still optimistic for corn prices going higher into the first of the year. Keep an eye on the relationship between existing corn crop in December 12, March 12 versus the December 12. That spread is still firming, indicating there's a basic demand under the market for a current supply of corn.
All right, let's talk about soybeans a moment. What kind of numbers do we have for the bean market?
No real surprises for the soybeans. The government did lower yields, but again offset that reduction in the crop by lowering exports some 50 million. This raised the projected carryover for next year in soybeans to 195 million. That's versus last expectations of 160. Basically, the beans appear to be struggling here. We're seeing larger Brazilian production, Southern Hemisphere production. So we think beans are in a critical situation. We've had several days of a close below $12 in the spot market. We think that's a bearish sign. So we're a little bit concerned that beans could see lower prices into year end and early into next year.
And a lot of speculation about cotton before these new reports. Were there changes for cotton?
Virtually no changes for the cotton market on USDA's report. Some traders call the report boring. I would caution that we're trying to build a base in the cotton roughly between 95 and $1. We've had several rallies in the last couple of months. However, I would be leery that if spot cotton, either the March or the December closes below 95, it may open the door for lower prices on the cotton market into the first of the year.
Nolan Cullen mentioned larger Brazilian production as being a factor in the soybean market. Analyst Elaine Cubb of Agricultural Risk Consulting goes so far as to say South America is the fundamental reason why the soybean chart has stayed fairly bearish.
Technical traders were looking for that soybean chart to come up again over its 30-day moving average this week, which it never was able to do. It never closed above 1240, for instance, on the November chart. And the only real fundamental reason behind that would be the excellent planting progress in South America. And I know that should affect those deferred contracts more than the nearby one, but it seems to be a story that's affecting that soybean market as a whole.
According to a study by the Organic Trade Association, 78% of U.S. families are choosing to buy organic. The report also says that 4 in 10 respondents indicate they are buying more organic products now than they were a year ago. The survey also finds that just under half of parents said they primarily buy organic because they believe organic products are healthier for themselves and their children. Again, this information comes from a study published by the organic food industry. We have a seasonal question for our trivia this week. Eggnog is, of course, a popular holiday dairy product. Our short question is, where did eggnog originate? Is the answer America or England? You'll find out here a bit later on Farmweek. We focus on livestock in this next segment. The Japanese government says it plans to slightly relax its current restrictions on imports of U.S. beef, according to news reports. Analyst Naomi Bloom tells Market to Market this development helps keep the fed cattle sector what she calls a friendly marketplace.
With the news this week that Japan is going to be relaxing their rules and regulations, we're going to see that market continue to grow. So Japan went from saying only 20-month and younger beef coming in to 30 months and under. That's a huge deal. And so that's actually already factored to increase the market by 25% for exports. And in addition to that, you said it quite well that the cow slaughter numbers and the heifer slaughter numbers, we're not seeing any changes in those. And so at this time, I think there's no herd rebuilding. And it's going to continue to be that way until the market sees what the rainfall is and how the pastures are going to be, along with other feed prices. But right now, it's a really friendly picture.
Walmart's recent announcement that it will begin carrying choice grade beef in all of its U.S. stores will change some key dynamics in the beef sector. This according to the CME Group's daily livestock report. The CME says the dynamics involved range from feeding practices all the way back through the seed stock sector. The report notes that the Choice Select spread has widened substantially as talk of Walmart's change for all its 3,800 U.S. stores has filtered through the beef industry. Well, time to change from livestock back to trivia to wind up the markets. And our answer this week is B, England. That's where the dairy beverage we know as eggnog first originated.